last time and rely on me, except,
Oh,
you know,
I have a webinar just with Laura. Uh, I can't find anyone who's had any experience with a RegA for not for profit.
okay, well, I'll tell you what, when you like the, I mean, I think unfortunately this is going to probably need to be more of a spitballing session and probably a short webinar because
Spitballing? There's no such thing as spitballing in this world. What do you mean
I'm going to be
spitballing?
disclaiming left and right that
Oh,
I'm not a
disclaiming.
collectibles expert. I really am not. I have
It's
ideas and thoughts about this, but
Yeah, okay, well isn't that the best way to approach things is from first we need to engage and then we need to ask questions and getting
we
things
do.
moving
And
forward.
I will be asking as many questions of you as you do of me, I think, because this could probably be more of a conversation because I'm going to be asking you what you're saying. I'm seeing interesting. I hear about things. I know of like certain companies trying to do certain kinds of raises, but
The
I
thing
don't have.
about
I don't even have any RegA issuers doing this, right? Do you?
collectibles,
Yeah,
yes, yeah, we do.
good. Well, you
Yeah,
can tell
no,
us all about them.
yeah, we've their collectibles are different. Collectibles are different because it puts what it does to the traditional capital raise, it flips it on its side because you go, wait a minute, this guy's collecting glasses. He collects
Yeah.
glasses that were worn by famous writers.
Is there a specific issuer who's doing that? Is that their raise?
and and uh, and these are the glasses that Ernest Hemingway wore, right? And
I'd buy
so
those.
so I'll go to one that I think it's pretty neat.
I'd buy a 10,000th interest in those glasses.
Well, so the other one is where they are utilizing to buy famous guitars. So think of it this way: you like something so much. So what is collectibles and how does it fit into reggae? So it's kind of two things that you would think that never come together, but they actually do if you just think about the modeling. Um, so we'll talk about cars, music, watches, shoes, wine, and guitars. Did I say
And
guitars already? So also,
I've got some that we can throw in the mix as well that you haven't mentioned. So
yeah,
there really are lots of interesting things going on in this space,
correct.
and if not directly in this space, maybe tangential but kind of overlapping conceptually with it
Yeah,
as
and
well.
I know people called it collectibles, but in reality, I mean, they still needed to create a company, an entity. So it's no different than you and I getting together and saying, "Hey, Sean, let's create a company." Great, let's do it. Let's go to the lawyer and we're going to call it ABC Collectibles. And it just so happens we're going to be collecting earplugs. And and if each of these seriously, if these each of these earplugs today they're worth $100, and the reason you're buying it is because you know that it's going to increase in value.
Are
It
those
it's a lot.
earplugs by Dre?
Yeah, well, there you go. See, and then the investor, what are they investing in? Well, they're investing in this company that owns these collectibles, and so the interesting thing is we've made such a big deal of it as of late that it's gotten a bit confusing. But it's no different than real estate. It's no different than any
Yeah.
other company.
And I was going to say, to the degree that there are digitization trends going on in real estate right now, it's very similar. It's just not a collectible; it's a real asset. But by the way, are we live now? Are we
We're live.
going?
We're talking.
Okay.
We're
Well,
talking.
should we tell everybody who you are and who I am before we get
No,
all nerdy and geek out on
I'm Sean Levine, and you are
Oscar
Oscar
Joffrey?
Joffrey. There you go. So we've done the confusion. No,
I
no,
might as well be because I might as well be Oscar interviewing you at this point, and I think it's going to be just
no,
as
no. It's okay. It's okay. Well, good afternoon, everyone, and welcome to the Core Summit webinar series 2021. My name is I'm Oscar Joffrey. Yes, the other one is just a fake. It's a
that's
collectible.
right.
I'm just
That's
joking.
right.
So you kind of get the sense of our webinars is really we're exploring topics that are coming up, and this one is one that is definitely getting everybody's attention. It's kind of weird in a way, but it isn't, and we're kind of demystifying a bit. We're gonna, we're not. It's very early in the game, and we hope that you enjoy the conversation. I'm going to be joined alongside with my colleague. Please, Sean, take a moment.
I'm Sean Levine with Intoro Capital. I'm the head of the firm's RegA and CF cap raise practices. We're licensed broker dealer all 50 states, the district, and Puerto Rico. And yeah, this is a niche, but quickly growing and kind of fascinating subsegment of the crowdfunding space more broadly as collective.
It is, and you know the thing that's interesting about it is that it's not that difficult. It took me a while. I have to be honest. I mean, the first time somebody came to me, it was watches, and I personally, I mean, I don't know about you, but I would rather collect cars. Okay, see, some people go, okay, I get it, but there are people who collect shoes, running shoes.
Yeah. Oh, yeah. No. That's a big thing. I have some friends on Facebook who are big into that, and they're always posting the newest kicks. And it's a niche. These are all niche markets appealing to different folks, but the folks that are into them are very passionate about what they're into. And I guess if you have a large enough audience focused on a certain thing, then if you can get the word out, then theoretically you can kind of create these markets.
I mean, the real thing about collectible is it's not the fact that you're the one collecting, it's how many other people would like to collect. So let's take an obvious one, because I think once you get the obvious one, it's easy to describe the model. We can safely say, I'm not suggesting that everybody wants to collect cars, but if you could collect a bunch of cars, imagine you being the collector, and Sean comes over to my house, and Harry and Jerry, and they all, oh man, God, it'd be nice to have just a little bit of ownership of that. And I decide, you know what, I'm going to create a company, and I'm going to put all my collectibles in that, and I put a value of those cars today, you know, whatever the price is. Let's say it's worth 10 million for all those collectibles. And the reason why you would invest in my collectibles is because, you know, I got a car in there that could easily, in the next few years, increase in value based on auction pricing. So it's no different than, it is higher risk, because
it's the only way I can get a piece of it. I don't have $10 million.
Exactly.
That's the only way that I can play in this game. It creates, again, this whole broader theme with crowdfunding and democratization of investment. Those are our buzzwords that we keep, the mantra that we keep preaching. And this is one more way that happens, because it's a whole special opaque market that regular investors have been unable to participate in. And it creates a pathway for you to invest much smaller scale, at your scale that you can afford, hopefully, but to be able to still potentially capture that same upside. Because if the asset appreciates, 300% over the next 2 years, then your fractional interest will appreciate the same level.
Agreed. And what sets it apart as well that I've seen is that I gave you the holistic, where I make all my cars part of the collectibles. And as I keep raising capitals to buy more collectibles to increase the value. So again, it's like any other company, except for that it sits there in this asset that could gain in value.
So this is where I do start to have a question. You mentioned that you do have some client issuers who are doing this, taking this model up. When we talk about this, are we talking about helping raise money for the issuer who wants to launch this market? Or are we talking about, they have a $10 million car, there's some back entity in the backdrop, there's a $10 million car, they have a whole bunch of collectible cars. This one, you want to invest in this Ferrari, this ancient Lamborghini, prototype that got raced once and whatever. Is the RegA 1973 Lamborghini, is it the specific asset, or is it an entity issuer that wants to run a market in these types of goods? What are you seeing in that regard? And could it be both?
We're seeing both. So, and that's where the investors really need to pay attention to, because I've seen one right now on guitar. I mean, it hasn't been approved yet, where you are they're raising the entire amount just for one guitar. Okay. So
how much are they raising?
I think on this one, it's about $5 million. So that's now the only reason I want to make sure we're careful here is that I'm not certainly suggesting that these assets or these collectibles are like real estate. It's just purely as an example. It cannot be, and I'll tell you a couple reasons why. There are certain restrictions out there in the market that we've seen already, like your retirement plan. It won't allow you to invest in collectibles if there's because they, even though people could make the claim that it's going up in value, to them it's not even a matter of high risk. This is the ultimate risk, because this is something that the only way it gets its value, it's on an auction. But let's say it was let's take a product that somebody was wearing, the runners of Oscar Joffrey, and Oscar won the Grey Cup and all that, and all of a sudden Oscar gets into some scandal, so the shoes go from $10,000, boom, drop down. It's still the same shoe.
Because publicly traded equities never face that level of
No,
risk on a day-to-day basis.
It's totally
They're so
different.
much safer. It's completely different.
It is. It's very different. It's why are you making me laugh? I'm trying to keep a straight face.
I'm so disgusted with the public market and the degree of inflation relative to reality at this point, that any of these conversations about the risk of alternative investments just
I understand that. It's just that there are gatekeepers within the industry that may restrict it. But as an asset,
whatever our views are, the regulators' views are what they are, and they're the ones.
Everybody's exactly. But the reality is, individuals are doing it. We're seeing it in where you can actually specifically be an owner of a guitar. So you would be among other fans of this particular. And the question is, how many fans are there for that product? And it could be, I've even seen it for cards, collectible cards. I mean, Jesus. I mean, this is
some of the trading card games.
The trading cards.
I know for and sports cards. Speaking of just seeing people randomly posting things on Facebook as far as collectibles, I had a buddy that was into comic books, and I knew him 20 years ago, and all of a sudden he just started posting about, he's just bragging about like, I pick, everybody's big on this or that in the market, and I picked these up, 20 years, and they've appreciated, however many 1,000% in value. And I don't even think the comic book market is anywhere near as hot as it was back when I was a kid. Like in the the 90s, it was a huge, in the 80s and 90s, it was this big fad, and it got the market blew up, and but so this is a little bit more of a subdued collectible market relative to some other things these days, and still, if you got the right ones, huge appreciation. So
that's just it. I think that's the risk that everyone is associating it with, where there may be, and like everything, there's always a risk, but as soon as one risk goes down, it affects any other future ones. But that it's not discouraging companies from exploring it. So it's basically the model of I'm a collectible of glasses, and there is a perceived value, either by a third party or something, which becomes the asset.
Let me ask you this. I think I understand. And the theme of this particular webinar is under RegA, right? RegA Plus, right? So here, I mean, I guess you take the cost of the RegA is going to come out of the cost of the asset, I guess. So you're going to offset it against that value when it ultimately is liquidated or monetized or whatever. And that would, because there is a cost. RegAs are not inexpensive, but other than that, I get the concept. You basically get this asset out into the marketplace through the RegA, and the value of it will rise and fall based on the trading in these units, because RegA shares are publicly transferable immediately, theoretically, right?
So and that's where it's getting a little muddy. I mean, so the community is treating a collectible of in a class of its own without looking at, would we normally think about a company that owns a whole bunch of playing cards and art and all that separately as a legal entity? Let's say it's, ABC Collectibles. Because we brought it down to the granular, right down to the one item, it is sparked a lot of interest in it, from fine art. I mean, art is one particular one where you're not going to see somebody raise money for a whole bunch of paintings. They're going to do it for one. And and they say, there's a lot of pros behind it, where, a guard against inflation, way to diversify and fund. But when when you start bringing it back to the legal, to the legal and the broker dealer community, it's a product that has no income component to it, and the fluctuation of up and down is unexplainable for them, to where the question is, will the broker dealer be liable for selling this product to their clients, right? Or like a registered investment advisor making, saying that this was, let's say this was the 1961 version of the phone,
Right.
and only 105, but nobody, I mean, we've seen this in art where people can forge.
Yeah, you're definitely creating, you're getting me really excited about Enzora getting involved in this space. I'll tell you that much. The Reg BI, we're getting treated more like investment advisors in certain ways, and even though we're not, and Reg BI, these are very legitimate questions, and something that, I mean, look, I think you have to be able to make your case for why it's a reasonable investment for somebody. And I think you can collect data and make reasonable arguments, whether, the bottom line is, Reg BI more broadly just kind of creates a license for the regulators to mess with broker dealers. That's what it is, because looking backward, anybody can blow up whatever argument somebody made and say, well, yeah, but you were wrong and you should have known better. And, at the time, nobody does know ultimately. And that goes beyond these collectibles and other types. It's all you can say is, look, this is a clean asset or entity or issuer or whatever, as far as there's nothing shady going on. So I guess for a collectible, the kind of comparable analogous work that you might do is to try and make sure that it's not counterfeit, and ascertain the veracity of the item and the authenticity of it. I think that's what you would try to do, but that's a very difficult thing in the real world in the collectibles market. They have horrible problems trying to authenticate items. So at least if it's an issuer, you can figure out if they have a criminal record or not, and you can really try and dig down and make sure that they're not a fraudulent, entity up to no good and so on. You can dig around and get a good handle on that. And you can look at their business model and see if it's not a multi-level marketing scam, or if it's a real thing. Not that, disclaimer, I'm sure they're entirely legitimate multi-level marketing entities, but still, that's hard to do for a collectible.
I think it's really interesting, because the fact that we're already seeing it, there are companies that raise money for watches and all that. Purses. Sorry, that was the other one that was getting to me. Purses.
Sure. Yeah.
There's a group that's doing purses, like high-end purses, Prada, Louis Vuitton, Hermes, and all that.
Which never have any trouble with counterfeiting.
Well, that's, I've been looking at this, and I've been, I watched a documentary the other day on wine, how one guy just kind of took the industry by surprise by doing counterfeit, by taking away the peel and the cork. I mean, he fooled all the connoisseurs, everyone, with fake, inexpensive wine. So that is the part of it in some, like art, wine, in those categories. I mean, I don't know if I bring it to the same with guitars and playing cards. I guess you could put it to it. So it does bring something really interesting. The collectible industry in general, it needs a verification component to it. And I haven't seen that yet in a RegA, where somebody's actually bringing some sort of high, like,
and high-end collectibles, they do, in like musical memorabilia. I mean, they do and autographs and stuff. There's chain of custody work but it hasn't been done for very long, and it's kind of somewhat few and far between that you're going to find items that have that chain of custody. But that's sort of like the gold standard of tracking, and with RFID getting more popular, there are more and more ways to do that kind of thing. But for all the older stuff that's been out in the market for years and decades, good luck,
But isn't that the stuff that's the valuable stuff? I mean, the first question I asked the group regarding the guitar, how do you know? And they go, what do you mean? How do you know that was the guitar that he played on? I mean, how do you know?
Yeah.
Well, it's been autographed. Well, I watched the show.
I have a Sharpie in the
Yeah, and I wasn't trying to be cruel. I was just trying to get and I get it from a fan's perspective, where now they can feel you can own something. I mean, I like that part of it where you go, Jesus, you know what? I would never get a chance to win a Ferrari like that. But you know what? I'll put in $1,000. I get a piece of it. If it goes up, I'm gonna be enjoying that ride, and I can say I'm an owner of that collectible. That
And
there,
the cars are probably a little easier, because there's usually there's so few of them made when it's something really, really unusual and the kind of thing that people want to collect, or they have VIN numbers, and there are various things that industry has tried for a while to legitimately track in a comprehensive way those items. So cars are naturally, if somebody buys and sells a car, you gotta have the title, you gotta move it. We already kind of try to track those. So that one, maybe that lends itself really well to this idea, and it's probably a good one to do, kind of dip for the industry to kind of dip its toe in the water, because it seems a little safer. There was somebody that was doing thoroughbred racehorses, or wanted to do that. You may be familiar with them as well. I don't know, but there was somebody out there recently that's wanting to do something in that space. Maybe that's a high end market, and the genetic, there's genetic testing and stuff you can do. So maybe that kind of thing, maybe that makes decent sense for.
yeah, I look the question will be, what couldn't you classify as a collectible? I think the that's going to be an interesting thing that the SEC will have to go through, because I mean, they're one of the things they're not doing is judging the merits of a business. I mean, who's going to say your business is going to be better than the other? Who's to say that this little thing here is not a collectible? If you think it is, and if you got other people that think other, the market will decide, right? Ultimately, that is their. But there are some questions that are arising from it, but it is causing a bit of a kind of confusion in the market as to, people when they think of collectible. Oh, great! I put in money on that art. Do I get to take it home? You don't. That's
You can
another
frame
thing.
the your shares or whatever uh, unit of ownership, and you can put that on your wall and take a little picture of the thing and put it next to it, because that's about all you're going to do.
That's all you can do. That's exactly it. You're not going to be able to do anything further than that. I think this is the part of collectibles that there's a lot of few things people need to understand of it, that it's because it's relatively new, it may not, I mean, just because you think, purses are great and all that, the likelihood that it can be tradable is easy. But again, the same argument could be said for any other company, whether it's tradable or not. One, they would argue that it's a collectible. Everybody knows Michael Jordan shoes are worth $1 million, so there's a lot of buyers out there.
It's like commodity investing.
It is,
except
it is
it's
a
super specialized commodity investing.
Correct. Super specialized.
It's not a commodity, because the very definition of commodity is it's some kind of ubiquitous thing, but still, conceptually, it's that kind of investing. You pick a thing, you think the value of the thing is going to rise, and you put the money in.
Correct. And it's really about moving look, this has just pushed things forward with the market in a way that we probably never even envisioned. Try to imagine the first comment. I've been trying to figure out who the first one is. I think it was Otis Collectible. I think they're doing purses and they're doing watches and shoes. They have an array of different types of collectibles that they're doing. And they were, when I think of what they needed to do in the early days to get started, or even, to even be allowed to do what they do, they're, so they're doing shoes, purses, and cards, right? And so the key here, this is a very different environment that we have seen before, where on one end they're raising the capital to create this environment. On the other end, they're also creating the environment to sell the asset as well. So not only are they creating demand. So right now I'm looking at one particular one they have here is you can buy shares in the Michael Jordan runners at $10 a share, right? And it's it's got the Michael Jordan going through the hoop, number 23, and these are the ones he wore, right?
Right.
It's so if somebody who really loves Michael Jordan says, yes, I want to be part owner of that. I could never buy it because it was worth, I don't know, hundreds of thousands of dollars. Now I own one share, and if they decide to sell, so the real question about the collectibles that I think we haven't covered yet is, like every investment people make, collectibles, sometimes people keep it for life because I love that car. I'm just not going to get rid of it. No matter how much money you offer me, it's just my car.
Right.
So the question is, unlike where you got a business where, it's time to retire. Well, are you retiring the collectible? Are you retiring the business? Like, there's a lot of questions that hadn't come out yet.
You get a whole, some of the ripple effects of this development, if it does kind of come to fruition the way we're talking about. One could argue that part of the reason that certain collectibles see such high prices is partially due to the illiquidity of the market and the fact that you only see liquidity events at high-end auctions and things like that, and there's only so much of it, or only there's one or two of these things, and they never get sold. So when they do, the spread, the bid-ask spread on the thing can be gigantic, where if we translate this one thing into thousands of units that become liquid, you might start to get some interesting price discovery dynamics among thousands of people looking at a thing and what it should be worth that you wouldn't necessarily have in the traditional channel of monetizing the thing. Because it's not something that's only going to happen once every 30 years, because my little piece of it, that can happen every day. If I'm plugged into this marketplace, and that pulls breaks the exclusivity and the illiquidity of that market a little bit, which is a good thing from an Adam Smith kind of standpoint. Markets assessing the proper values to things because of the ability for people to get in and out of them. But if you're somebody who owns those assets now, would you potentially be a little more reticent to take that path if you're worried that might dilute the value of it? And one other piece to think about is, if you start to see this stuff take hold and gain traction, is I want to buy warehouses.
But I know, to store them. But let me ask you a question.
Because they're just going to sleep. They're going to be hidden away somewhere.
Okay, but you brought trading. I mean, one thing about collectibles, we know where they get. It's through where's the auction houses, the big names? Sotheby's. Yeah. That's where you go. They set the price. So having secondary market trade for those shares, that one I'm having a problem with.
It's dual track. It's two, because one, there's the free trading market over here that's going to just set the day-to-day value, but then over here you have the real liquidity event when the auction would happen, and the physical asset will occasionally change hands, and that's two separate completely, but they could influence each other. And that's what I'm saying about if you were somebody who actually did own one of these assets, if you're worried that what's going to happen the day-to-day over here, if the price, it falls, and maybe it's a temporary blip, maybe it's something that you just would have waited and maybe you still wait, but maybe that visibility on the movement of the day-to-day could eventually, bleed through and have an impact on the long-term price as well.
Yeah, that's the one that I've been struggling with, because RegA is a liquid asset, and the fact that you can secondary market trading. I saw Otis make an announcement for secondary market. I'm going, okay, so I own shares in these shoes at $10 a share, and I'm not cracking it. I think it's great. I'm trying to get the logistics down to
get your head around it.
Yeah, thank you. To how would I know that it went up unless I'm getting an indicators on some auction house So that would mean there would have to be another one like it or another one duplicate to it to give some compare. Like it is an asset class. I read an article about this once. They said that those who invest in collectibles should be those who love collectibles, who love that particular.
Yep.
You shouldn't do it for the same reason you do other asset classes, because you're there to have fun with it. Like to say, oh my God, I actually own that 1932 Ferrari. Right on. Right.
There's a practical utility that you get out of it. This is Jared. Man, I'm feeling like I had a good humanities education at West Virginia University. It's very Jeremy Bentham. The utility of the item, it has inherent value for you that you're getting out of it, regardless of whatever else. It has a practical utility that you get just in the enjoyment of the item, as opposed to just some monetary store of value that you're trying to game the value of it over time.
Yeah, it's just I think we are encouraging people to use, obviously those who like collecting or have a collectibles or see a business in the collectibles, you can clearly see. So we've now seen cards, shoes, guitars, athletes. So
which plays, all this plays, and I want to come back to athletes. I like that you mentioned that. I was going to mention it too, but this plays back into the broader theme of with a RegA or a Reg CF. You know, that's part of the appeal for these raises anyway for an issuer, is to get to build brand awareness and create this army of brand ambassadors. So the corollary being the people who are passionate, much like people who are passionate about whatever collectible it is, are the people that ought to be really, involved in that market. The people who are passionate about some company X that's got a good or a service that they love, they can be the best investors and supporters of those companies when they have a Reg A offering, because it gives them the ability to take even further literal ownership in this good or service that they love, in addition to being a consumer of it.
You know what would be really good for the collectible industry? The same people that are advising the ultra high worth to invest in this painting or in this because they will bring value. These people do that for a living, right? They encourage people of great wealth that you should buy these things in over 5 years, so this will be worth X. We need that one more layer down so the industry can understand what this potential could be. Yes, today these glasses are worth 100,000. But in 5 years, based on everything, it could be worth this, like any other business. But they're coming at it the same way they advise the ultra, because we know art is being purchased. We know all of these collectors are already been. What I like about this is that we're not being offered something odd or weird. We're just being offered something that typically is being bought by one person who then makes a museum in their house, which is fun.
Or pay somebody to store it in a warehouse just so they just want to own it for the appreciation. They don't even show it.
They don't even show it. That's right. Clearly. So now,
which relates to what we're talking about as a regular investor buying a 10,000th share of the thing. Well, they can't show it either. So that, I think the warehouse demand, as this picks up, warehouse demand just rises, because you're going to be more and more people taking little tiny slivers of something, don't actually have it. It's good. The thing's got to be kept safe. You're going to put it in the dark in a box in row 37B of a warehouse in
well, they better make sure they make their monthly payments, because I certainly don't want to see it on one of those shows on an auction.
Oh yeah,
Look at all that art. Look at that. No, but it is interesting. Collectibles are here to stay. That's for sure. We definitely got a lot more questions to ask. And Sean, I appreciate you and I doing this today, because it's funny for everyone out there. There isn't a lot of expert. Nobody's been talking about it other than the people that did it themselves. And unfortunately, we can't just bring those companies that are doing it right now on a webinar, because the fact they're doing a RegA right now restricts them to certain activities. And this is one of them. But my curiosity is, I think it's a great thing. I think, for me, cars are one of the things I love. So would I invest in Jay Leno's collection if he was to put it out there and everybody could the way that guy takes care of cars in a heartbeat, right? So we're going to see that with sports teams, same thing.
Let's can we before we get to it, I think we should touch on this because it's a totally different flavor of this idea. But and gotta be careful, I think, about how we talk about it. But pro athletes, and I know some issuers who are doing this, creating these channels and marketplaces for pro athletes to monetize a piece of their future cash flows, and by letting people invest into that cash flow stream and digitize that, tokenize that cash flow stream. And if they can pull this off and get this at any kind of scale, and what they're talking about doing these as CFs, so that the investor, and with a Reg CF, you got to hold it for a year before it's transferable. But because it's a lot cheaper than a Reg A, and again, you can kind of take little individual, like if you wanted to get a whole bunch of different people that you could invest in their future cash flows, it's a less expensive way to create that market other than having to wait a year to do it. But Spencer Dinwiddie, if you Google around, he tried to do this a couple of years ago. He's an NBA player. But these guys want to do this at scale, and it kind of mashes up the idea of people who love fantasy sports, but to actually, with a stock market, that concept, where you have a whole market of 1,000 and call NFL players, and who are all, and they come in and they sign their rookie contract, and then they go out and they create this security, and you go in and you say, all right, well, I think this guy's going to make it. He's got the goods. As long as he doesn't get hurt, he's going to be a huge asset to the league for 15 years. And the next contract's going to be an $80 million contract or something crazy. You come in with his rookie year and you participate in this security, and then you wait out the 4-year, the rookie contract. And when it comes time to renew, or it comes time to sign, for real and cash in, then you get a piece of that. So it's a fascinating idea.
Sean, if you see some of the new, this Evo is getting the athletes even before they become famous. I mean, who would have thought of that? Evolution, they're doing a reggae right now a lot. That's one. Then there's Fanvestor, and what are they doing? They're allowing you to own pieces of music, and
musicians can be another exact same.
Another one. Exactly. And then we saw it in gaming, online gaming. So collectibles, I don't know why they got this kind of, I'm not going to say they got a bad press. I think part of it is because art and wine and cars, purses and all that, and watches, just kind of weird, and shoes to a certain degree, but it's no different than the others. It's just, we get the real key will be making sure that there is, here there's due diligence. If you go to firms like CrowdCheck at Sarah Hanks, how does she do a due diligence on an asset? She doesn't even know that that's Michael Jordan's signature, other than Charlotte saying, yeah, that's his shoe. I was right there at that game, and there's the picture of me and Michael.
And that's the chain of custody stuff I'm talking about. That's the kind of work that the folks in the collectibles industry try to do. That, again, varying degrees of success, but that's theoretically the way. And with the advent of RFID tech and being able to try and chip things, I guess. But how much that's actually done.
The newer stuff will be there, good, but
the old stuff, it's hard. It's very you can't just go back. Have a time machine, and most of this stuff has just been floating around. As these markets go on and incorporate the new technology advances and the new best practices, it's going to get easier. You know what? The evolution of these markets that we're talking about could help spur that and help push those folks to adopt those practices.
I think so as well. I think now that we're going to see a lot of young entrepreneurs that are getting into the, buying a soccer team, collecting soccer team players and all that, we're going to end up creating. I love that, because you know what? It just goes to show that the things that we always thought it was 10 feet away from us, or even further, could be a lot closer, just by giving an opportunity to be an owner in it. And I do get the joy. I mean, I like collectibles. I think it's fun. I'm not a big fan of shoes or fans or any of that, but I like the art one. That one really appealed to me. But I know there's a
Uh,
high level of risk on that one, right?
whiskey barrels. There's folks doing that in the Reg A side, or I'm sorry, Reg D side. I think that's really neat. I'm a whiskey guy, and I think that would be super fun to
A
get involved in
whiskey
that
barrel,
space.
a barrel of whiskey.
No, but full of whiskey. Like you get it, and then they looked at the appreciation of value of whiskey as it's aged over time, and it's pretty impressive. And you can age it for certain, go keep aging it for years and years, and there's a point at which it kind of peaks out and starts to get too oaky and whatever. But yeah, if you pick the distiller, you pick the master distiller, and if you know that what they know what they're doing, or if somebody comes into a barrel, and then maybe you could transfer the juice over into another kind of barrel so that it does something different. People who are into that stuff, there's all kinds of different nuances to it, and it can be very expensive. The end product can be extremely expensive, and it's a wholesale good, really, because it's not until you bottle it. And there's a huge price difference between what it is in the barrel and when you ultimately bottle it. It goes way up. So
wow, I love that. I didn't.
Yeah, that's a fun one.
But that just goes to show you anything goes, right? I mean, that's the bottom line to this. And I hope for everybody, look, unlike all the other ones where we have very specific answers to the question you heard, we were just really exploring what's there already. We're trying to somewhat not take it apart, but put some understanding to it from the structure of how investing is done. And obviously, you could have got this on the web. You could search it and get that on your own. But you can clearly see that we're going to see an increase in this. When we first got involved with it, I think there was only one or two. I think now we're going to see more of them. With $75 million, it does increase the collectible profile that you could have. So, imagine you buy $75 million of collectibles, or you have it. There's a lot you can do with it that brings value to these investors. So it is going to be an industry that's going to evolve, and hopefully as well, our conversations will evolve. We've been hunting to find. There's been no broker dealers involved in these. So that's one. A lot of the lawyers, they've done it, but they go, you know what? I don't want to talk about it anymore.
We've had some conversations. We've met, but we haven't quite gotten to the point of pulling the trigger yet.
Yeah,
and we might. We're very forward-looking firm, and we were early into crypto, and we're into tokenization, and it's possible we might be one of the first ones to dive in and see what happens. But Jim, our managing partner, is not afraid to take a risk and to try and move the ball forward on something in fintech and financial services and structuring as things evolve. We're not scared. We don't shy away from it. We still try and do a thorough evaluation and make sure we're comfortable. But
yeah, I think everyone is. I think that what makes this one a little different is that there are some variables that the question is, if the SEC is not doing all the due diligence, which is not possible, who's on the hook if, and I say only if, right? Because this is the guy's been.
That's why I think it's probably for us to get, it's probably going to need to be something that is more easily authenticated, like the cars, or something where there's just, or something where you can genetically test, or maybe the whiskey, if you could do a chemical analysis of you ought to be able to kind of get the DNA of the composition of it and figure it out and make sure it is what it's supposed to be. Something that's a little more easily analyzable, authenticatable, and less forgeable, less subject to potential fraud.
Just like any component of our business, we didn't have due diligence at the beginning. Now we do. We didn't have investor accreditation. We didn't. Yeah. This is going to be just one of those things we're going to need to be aware of as more entrants come in, right?
How do you analyze a pre-revenue company? It's the same. We've had those conversations. It's the same kind of thing. You have to come up with a process that makes sense and is defensible and adds some value. I mean, it's not. This is not perfect math. All of this stuff involves a degree of subjectivity and a degree of art as well as science, but you come up with a process that makes sense, and you apply it, and you learn and you go forward. I mean, that's.
Hey, it's been a great conversation with you, Sean, today. I'm glad you got on, and
I think I did a much better job than Jim would have done.
Don't
So
say that. Don't say that. He may get upset.
he gave me an hour's notice, so he gets that. He gets that. The rest of it, I'm happy you've done it. It was great. I hope you got something out of it. I hope anybody who hears it did.
I think right now, look,
there.
Sean, the whole idea right now is just discussion. Try to imagine when we were discussing crowdfunding. We were putting theory. We knew we kind of did, and this one's a little different. We already got some ideas out there, but the point is they're just scratching the surface of what people are going to come out with. That's what I'm saying. There's going to be
it's evolving in real time.
Exactly, evolving real time, right in front of our eyes. So, listen, have a great week, Sean. It was great talking to you. Great, everyone. Looking forward to having seen everybody at the next KoreSummit webinar. Have a great afternoon. Cheers.
Thanks, Oscar. Take care, everybody.